Hi folks, this is Hyman, and I wanted to talk to you today about the power of candle charts. Candle charts really became more popular in America back in the 1990s. They were around before that, but they weren't widespread at all. And before that, pretty much all you had was bar charts. And let's take a look at a bar chart. A bar chart, it's not quite as colorful, not quite as easy on the eyes, and doesn't necessarily tell you as much. A bar chart will tell you where something. Let me kind of bring it up bigger here. Where something opened, where its low was, where its high was, and where it closed. And a candle will show you that same thing as well. Matter of fact, let me go back to blowing that up a little bigger, and then we'll switch back. But a candle is so much more dynamic, and just the coloration alone helps tell you a lot. For instance, when you see red candles, that meant that it was a down day because we're on a daily chart. So that the candle went overall down and not overall up. So it told you that the sellers were in control. And you can see that the sellers have been controlled through this whole time, with the exception of one brief day, and the open and close was almost, almost nil. So just that alone, just the coloration in candle charts, red for bearish and downtrends, and blue for uptrends, can help you a lot in trading. But there's also things that candle charts show you that bar charts just simply don't. For instance, they produce these long wicks, and long wicks tend to be reversalary. So when you see a long wick on the bottom, it tends to mean a reversal that will head higher. When you see long wicks on the top, it tends to be where you'll see reversals that head lower. And of course there are exceptions to that. Like for instance, here's a long wick down, and when the pair trades down below through the bottom, of course, then the trend is more likely to continue. But more times than not, you'll find that these long wick periods really are, especially if there's two or three of them in a row, really are times where a turnaround will happen. It's the market's way of trying to turn a curve, basically. And so what's happening in those times is that the pair gets bought up, and it continually closes it higher, whereas before it was closing it more towards its lows in the downtrend. So it shows you a pivotal point between the downtrend and the uptrend, and it's just very easy on the eyes to take a look and see those long wicks. Again, long wicks on top tend to mean that things are topping out and things are about to head lower. Long wicks on the bottom tend to mean things are bottoming out and about to head higher. Also, there are, as we discussed in some other videos, doji patterns, which are these little plus-like symbols. Simply means indecision, but when they break out of those indecisive periods, the direction it breaks out in tends to go that way for a number of trading sessions at least. Here's a doji, breaks out, actually a couple of them, spinning top and doji technically, both meaning and doing about the same thing. When it breaks out, a good number of sessions that it heads in the same direction. Again, here's another one, breaks out and still heads in that same direction. So just by knowing wicks, dojis, red candles, blue candles, just some of the basics of candle charting can help you a ton. There is just an enormous amount of candle charting patterns out there, and honestly, you can usually boil things down to about a good 8 or 10 or 12 max candle patterns that are widely used, widely watched, and things of that sort. So, for instance, this is what's called a bullish engulfing pattern, because this blue candle's body, in other words, the body is the fat part of the candle, engulfs the body of this former candle. And so a bullish engulfing, that's a sign of a bottoming and a turnaround there. And let me see if I can, here's an example of a bearish engulfing right here. Small body candle swallowed up by a large red candle. So that engulfs that previous one, and it's a telltale sign that there's usually a top that is happening. So those are some of the signs. When you see a small body up top and a long wick below, that's called a hammer candle, and that's typically known for a bottoming period. Let me see if I can find one that's a topping pattern. This one right here is a short-term topping because we had a rally up here. See the long wick on the top here? That tells you that there's a huge propensity for this to head lower. So again, and that's called a shooting star. It's a bearish pattern. It's like an upside down hammer. They're at the tops of downtrends, and hammers are at the bottoms of uptrends. Here's another hammer right here. Small body, long wick below. It's got a slight wick above it, but not enough to make it not a hammer. And so it's a pivotal turnaround point to where it's likely to head higher. So this is called an evening star right here, where you have a long body candle up, a small doji-like candle, and then a long red body candle after it. And it's a reversal pattern. It's a evening star is a bearish pattern, shows a top that is likely in place. Here is an example of a morning star pattern, which is again a 3-candle pattern where you have a red bearish long body candle, a small body candle, doji or a hammer typically, and then a long blue body candle that heads higher. And it's a reversal pattern for a bottoming pattern. So not only can you check out things like support and resistance levels and oversold levels on indicators like stochastics and different things of that sort, but you can also look and literally see what these candles are telling you too, just by looking at their colorations, the wicks, the candle patterns that I just showed you and taught you here. And I would encourage you to go back and review this video over and over a few times, maybe even write some of this down, and challenge you just to start going and looking at charts and looking for different candle patterns and seeing the outcomes that they're saying are apt to happen, and look at how many times that happens. I think you'll find that it happens a very high percentage of the time, and it can give you a very good edge in your trading. Thanks so much for watching. Bye-bye.